Welcome to 𝐿𝐸𝐺𝐢𝐽.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on 𝐿𝐸𝐺𝐢𝐽.com. Led by two industry veterans, Bill Shanahan and Brian Pieri.
So the music didn't
Hello,
work.
folks. I was saying, music didn't come on. Don't know what that
No.
deal was.
No.
I'm Ron Burgundy. You stay classy, San Diego.
That's right. Stay classy. Bill and Brian here with the weekly update Wednesday. Hey, listen, we've been watching the markets. You would think that right now everybody had turned their air conditioners off and that we're just cruising on opening up the windows and letting the air blow through. Now, if you live where I live, that would be a bad idea. So it is nice and warm outside. So, Brian, let's take a quiz. It's almost like a game.
So you're telling me there's a chance?
I know when I was in college, they said it was going to be a quiz. Yeah, I always thought it was a game because I didn't.
All right, we are going to play a quiz, and this is going to be interactive. So if you're joining live, we want to hear from you and hear whether or not you agree or disagree. True, false. We're going to keep it simple. It is not a multiple choice. It is a true, false. But that said, we would be remiss without discussing a massive collapse in natural gas prices, all the way down from $2.50. Let's take a look at the day chart, and we started this on the 15th, so it is the 17th. So we have collapsed down, and we are now struggling to stay above $2. So we will be monitoring this. But this is an observation that I just had this morning in our Discord group. Interesting. I wonder if somebody is building a natural gas to crude oil contrarian spread. Yeah, buying crude oil and selling natural gas. So I wonder if that's what the is underlying it. There is no telling, but just something interesting when we look at the different correlations. So for those of you that don't know us, this is Bill and Brian. We are with 𝐿𝐸𝐺𝐢𝐽.com, and we are going to walk you through our quiz, our interactive quiz. And at the end, we're going to discuss who we are, who we help, and what we do to help businesses and help people understand energy markets so that they put in actionable insight into their businesses. So the natural gas quiz game. So the first questions: Canadian imports of natural gas are low. So what do you
Brian,
think,
now
Bill?
when you say are they low, what are you doing that to compare to? Are they low because, well, they're underground, so that would make them low? Or are they numerically low as compared to, well, they usually give us this, but now we're not getting this much, or, volumetrically, I guess would be the word. And that is compared to, whenever time you use the word low, it's always relative. So what we're trying to figure out is based on a normal Canadian import, or even from a year ago, are Canadian imports low? And I don't see anybody posting any answers out there.
No, I don't think we have any answers out there, but we are going to take a look into the data and really talk about each one, because all of these are worthwhile questions. So Canadian imports, are they low? True, false. So in the frame that you discussed versus last year at this time, are they low? What's your answer, Bill?
Say they are not low.
They're
I think
not low.
they're the same, if not up a little bit.
So that is correct. It is false. So Canadian imports just hit 7 BCF a day, which is 1.5 BCF a day higher than last year at this time. So let's take a look at Canadian imports. So on our trusty little platform here, we will go. So you can see that Canadian imports generally range between 4 and 7 BCF a day. But I want to note something here, that this is a run up from April to June. So if you look at this year, from April to June, we went from 4.5 BCF a day to over 7. Now let's look at last April through July. We went from 4.7, 4.5, all the way up to 6. So we got to 6 BCF a day. So we have an extra BCF a day. Do you want to pose a thesis or a hypothesis on as to why?
Why we had 6 before, or are you talking about on the why of the increase?
Yes.
Well, they've actually been running some more rigs up there, and they're running those rigs in preparation, I think, to fulfill their obligations they'll have with their LNG at Kitimat.
Yeah, Kitimat LNG is due to come on in 2025, and that is going to add about 2 BCF a day of exports. It might be 2.5, and I got to look at the timing of their trains that are coming online. But when you look at that, we are about to lose probably a BCF or 2 BCF of imports from Canada. Now, how much is that? Is that a lot? Well, let's take a look. So on the supply side, we have about 108 BCF a day on our daily supply side right now. If you have 7 BCF a day, well, that's a fair chunk. Now,
Right.
BCF a day, is that a lot? Is 2% a lot? Well, to markets, it is. To commodity markets, 2% is a lot.
Well, let's think about it. We've had Freeport go down this last week. It took 2 BCF off the market and cratered the price.
Yes. I mean, effectively, you can look at when this happened at the end of June, and we went all the way from 252 down to $2. I'm going to call it $2. I'm just going to round it to $2. And in that fall is a big reason why we went down, because I put this in our Discord last night. Over the last, I'm going to open in the browser so that I can blow this up. Over the last several days, our 30-day moving average of LNG exports is about 12 BCF a day. We were exporting as high as 14, but we're currently at 10. So that too is impacting this alongside weather forecasts. So these are the factors that are important to look at when you're looking at markets, because it's not just one thing. It's not the price goes up. It's very simple to say it depends on supply and demand. Those are two variables, right? But they're interconnected in a lot of different ways, such as weather is impacting LNG flows. Weather impacted power at Freeport, and that resulted in 2 BCF a day offline.
No, I think it's interesting to point out is that in a time when we lost 2 BCF of demand, Canadian imports are 1.5 BCF higher than they were last year. Just those 2 points can really have a significant financial impact on the market.
Yeah. So we lost 2 BCF a day of market or demand or exports, however you want to frame that, and gained 1 to 1.5 BCF of supply. So, the first question: Canadian imports, are they low? True, false? That is false. Next question: production is high.
Brian, it's got to be high. I've been hearing in every headline, production is high. We're going for a record production. Production is high. So I would have to say, let's go with, I don't know. If it's in the headlines, is it really true?
You sit on a throne of lies.
Oh, no.
So production is high. So in relative terms, that is false, but it's a trick question because production last July of last year in 2023 was 102 BCF a day. Last week was reported at 101.7, but we have had prints on the daily above 102. So it is a trick question. And we are trending certainly in a positive direction. Let's actually look at the supply side, and you will see that relative to last year, let's just take this right there and right here. So 2 things. First is last year we gained from May 101 BCF a day up to 102.8, but it was this fourth quarter that really surprised people. It surprised me. And that popped us all the way up to 105.8. We've since come off that and had a modest recovery.
Right.
So losing 5.8 BCF a day and then recovering a B or a B and a half is key. So we are trending in a direction that would indicate that we're going to have supply growth. However, if you look a little deeper, which is what we often do, you will see that we are facing declines. We are essentially treading water. We are declining every month by 3.5 BCF a day, and we are currently bringing on about 3.5 BCF a day. So both of those facts are leaving us relatively neutral. Or put a different way, our net decline is maybe 100,000 MMBTUs a day, and that's out of 3.5 BCF. So we bring on 3.5 BCF a day, and we're not able to keep enough production online. So that's what we're looking at on the supply side.
Yeah, that has a deteriorating factor on the supply side, is that, and the decline only increases as we go along. The more wells we drill, the higher the decline becomes, because it's the lower and older wells that have the low decline.
Now, I
The
will
more
say,
new wells we have,
I
the more
will say
decline we'll
the
have.
EIA has a short-term energy forecast, and that is projecting that July we will exit at 103 BCF a day, and by November we will be at 104 BCF a day. I will take the under on this. I do not believe that is. I don't believe that's accurate.
He's an angry elf.
So, so when we look at production, is production high? It is not high. Our production is high. That's a false. It's a trick question because production is lower than this time last year. However, on the daily, I expect this to reverse within a week. So let's move on to the next question. Renewables have destroyed natural gas power generation. True or false?
That's inflammatory language. How can you say destroyed? That seems so mean.
He says we're going the wrong way.
Oh, he's drunk.
Well, that could be true because sometimes
I picked a hell of a day to quit drinking.
So
I would
have
say they have not destroyed natural gas generation because as much as we see about the renewables, that all the new renewables that are coming on are struggling to keep up with the increase in demand.
right.
So
Um,
I'm going to say this is false.
so before we look at the charts, let's look at the answer. The answer is false. We have added 1 to 2 BCF a day of gas demand for power since last year. While renewables are making a dent, natural gas serving as a fuel source in power is fact. And let's take a look at the demand side. And on the demand side, we are looking at power. Actually, let me start with this one, because this this is our hourly usage of power. In other words, what fuel source is generating power, and this is on a real-time basis every hour. Of course, it stops on the day before, but when we see the orange, that is solar. So that orange right here, that's the solar piece of it. But when we look at natural gas, I want you to notice something. We have a very big oscillation between peak to trough. And this is becoming slowly unsustainable. Our pipelines are on the brink of not being able to sustain covering 100,000 megawatt hours within 6 or 7 hours.
Yeah,
And that is a challenge. But if you look at this chart, this is a daily chart, and
But Nuke was still confused.
if you look at the daily chart, you can still see that natural gas is the large green component, and nuclear is a fair share. Nuclear and coal, probably both of those together equate to natural gas. But over the last, of course, we have the seasonality, but over the last 6 months, we're growing because we're getting into heat season. Now let's look at the actual demand numbers for natural gas on a MMBTU basis or BCF basis. So when we look at a BCF basis and we take it back to 2019, and I'm going to say this appears to me to be a case of higher lows and higher highs. I mean, we have periods where we kind of stall out, but as you can see, there's been a good acceleration here. So you can almost see a shift from winter demand, because we have had mild winters, to increased power demand. But we've increased about 1.5 BCF a day of or 1 to 2 BCF a day of gas demand. And when you look at this, that is 100% accurate. So that one is false. That one is false. So let's look at the next question. Storage will not be able to take all the gas this injection season. True or false?
Oh no, we're talking going back to the question that has been asked for as long as I have been in the business. What is the volume when we say storage is full? And over my time in the industry, it's been anywhere from 3 TCF to 4.5 TCF. And so in order to be able to take all the gas for this injection season, you have to look at where you're going to end up. We think we're still going to be under 4. I think 4 is nil. So I'm going to say that we will be able to take all the injection this season. I say that this statement is false.
Forget about the curveball, Ricky. Give him a heater.
So, this is. Wait, what happened? It's fuzzy. It's fuzzy. Okay. I got to click on it. It is false. It is false because storage currently is 20 BCF a day over the 5-year maximum, not the 5-year average, the 5-year maximum. But bear in mind, in March, we were over 300 BCF a day over the maximum for that time of year. At the current rates, most analysts expect 3.8 to 3.9 TCF by the end of the season. In 2020 and 2016, storage peaked around 4 TCF. This does hinge on production. If we continue to grow and we actually get to the 103, 104, yeah, we are going to have challenges on storage. Doesn't mean it's impossible, though. It also depends on LNG exports, which we discussed earlier, which currently has Freeport down by about 2 BCF a day, and power demand and heat. So all of those contribute to that equation. And when we look at them, let's look at them one by one. On the supply side, we can definitely see a trend, a positive trend. We went from May down at 98.8 up to 101.7. Let's look at last May. What happened? May to, by the end of July, May, we went from 100.8 to 102.5. So we're kind of on the same track that we were last year. The real question is, will we see a fourth quarter like this? Because last year, between July and October, there was really no big growth or decline. We just tread water. So the real question is, are we going to see that fourth quarter surprise? And if we look at EIA's short-term energy forecasts, we are looking at us getting to, that's 2023. Let's look at 2024. We look at a gradual increase over time, but they are forecasting, EIA is forecasting 104 BCF a day. That is massive.
Oh, Rexy, I don't think this one's got the distance.
Nope, I don't think it's got the distance.
So you go back to that, when we talk about production, you go back to the supply balance. This is why it's important about Canadian imports and Mexican exports. Because those are sort of the, and 1 BCF makes a difference in the price. So the exports and imports are the ones that can move by BCF without really much notice or us getting there. And they can cause that and Freeport is in my example, in that when Freeport went down, 2 BCF went away and the price cratered. So when that 2 BCF comes back on, even though production may be up, demand is up. And so it's got to be up. But we have declines affecting that production. So that leads us to what's next, Brian? What's next on your list?
What is next on the list? Let's take a look. Drilling will save the day. Meaning,
drill, baby, drill. Is what you're trying to say?
Uh-huh.
Well, sometimes
I said, put the bunny back in the box.
Okay, that is it from now on. When we're talking about production, that is going to be it. That is 100% going to be what we talk about, because production has thwarted so much and it's been so resilient. So drilling will save the day. False. We currently decline over 3.5 BCF a day every single month, and we currently add 3.4 to 3.5 BCF a day of new production every month. Of course, we track this every month in each particular basin. And if we look, we have been at or around neutral since July of last year, which indicates that we have essentially been treading water. So this wave that we saw in the fourth quarter, that was really driven by two new expansions and pipelines out of the Permian, and we have one that is coming in September. But early word is that will not be full out of the gate. So we will see. But my prognosis is we are going to tread water. We are not going to gain a lot, but we are going to start sliding down on declines. So that's what I think on drilling, and that concludes our quiz show for the day. So that's our quiz show. Now we can look at prices, which look terrible for natural gas. I mean, unless you're buying, if you are buying, this is phenomenal. We have a lot of consumers that come to our platform because they are trying to identify when will be the right time to buy the commodity. And right now, I think is a fantastic time. That's my opinion. We're not financial advisors, but we do have a interactive platform dashboard that you can access in our subscription services. I'm just going to tell you quickly about us. Energy Rogue, we provide information on the price, supply, demand, imports, exports, storage, stocks for natural gas, crude oil, refined products, NGLs, and electricity. We cover rigs, we have asset maps, we cover drilling permits, and we advise customers on how they should really understand the energy commodity, because what you see today is not what the price is going to be tomorrow. We have 3 tiers: Rogue Edge at $89 a month, Rogue Premium at $179. Rogue Edge gives you access to all of the charts, everything that we talked about, plus you get a weekly PDF insights into what's going to be happening during the week, plus in-week video updates of what is happening. Rogue Premium are for those that want a little bit more interaction. You get to meet with Bill and I once a month, and we talk about your strategy and what is important for you. That is only $179 a month. And then Rogue Advantage is a bespoke consulting engagement where we focus on your business, whether you be a consumer, a producer, a trader, a hedger, institution. We have hedge funds, we have producers, we have consumers, we have individual investors. We have so many different people in Advantage, and it truly is customized to and tailored to what you want to accomplish.
Well, we have people from all over the globe, so we're going to have a lot of different perspectives. In Rogue Premium, you get a chance to see that perspective in our Discord channel.
Yes.
So.
And this is our Discord channel. As a matter of fact, Scott, if you're watching, hey, thanks so much. And good luck on the spreads. Let me know if you need some more guidance on that. But we talk about the markets every single day, and even talk a little bit about what Houston looks like, which looks a little bit like Mad Max. So Houston traffic is getting to be like Mad Max. But if you want to be on top of the energy markets and they impact your business, then do yourself a favor, get educated. We're here once a week. We talk about the energy commodities. We would love to hear from you and what your thoughts and what you want to hear about. But we cover natural gas, crude oil, refined products, electricity, NGLs, and so much more. So I think that about wraps it up. But
I believe so.
what is anybody, if anybody's out there, we're going to hang for a couple minutes. If you have any comments, if you have any questions, drop us a line and let us know, because we are going to close it off with a discussion about gas markets, and gas markets are down significantly. What you think the main reason is? Freeport?
I think so. I think Freeport, the loss of demand there is pushing things. I mean, the Permian's taking the biggest part of the hit. I mean, this is what we do that's different. We don't just tell you what the generic gas market is. we break it down and tell you where the activity's happening, who's getting hurt. And right now, the premium's getting hurt more than anybody. You can see that on our basis map. I mean, a basis of $1.90. Give me a break. Pretty soon it'll be back to negative prices, and that's at the wall. That's not the wellhead. And we talk a lot to producers about the wellhead price. And so when you see a basis price and or a index price on the physical market, you still have to take anywhere from 60 to 70 cents off that price to get to the wellhead price. And so it doesn't surprise me that that our rigs are down. It doesn't surprise me that some people are not pushing it. I mean, there's some rig efficiency that we've gained, but I think that the demand with something like Freeport, you take 2 BCF out of the market, it's pretty strong bearish signal, and
Right.
There's not many people who can make that up.
No, and the real question is, how much does Matterhorn bring on in September? And on the production side, and the key variable is losing that 2 BCF a day of Freeport. So the combination of the dredging that they had to do around the LNG facility to fix some of the damage from the hurricane, as well as the power loss, that is the real factor here. And those are the real questions. So listen, if you've enjoyed this, drop us a like, drop us a comment, reach out to us directly. If you want to connect with us, you can reach us at, let me put this up there.
There you go, Rogue at energyrogue.com.
There you go, Rogue at energyrogue.com. Or we monitor the comments. We may not be as timely, but we monitor the comments. If you comment, I will get back to you. So if you can't remember Rogue at energyrogue.com, you can also hit up Bill at energyrogue.com or Brian at energyrogue.com. So listen, thanks for sharing a little lunchtime with us on Wednesday. We will be back here next week. If there's a topic you want to hear about, let us know. So that's all I got.
Come go Rogue with us.
All right, folks. Hey, listen, enjoy your Wednesday. Thanks so much. Have a great one. We'll talk soon.